Okay, folks. Hey, welcome back to the Real Men of Real Estate radio show. This is your host, Patrick Franz, the Note Mentor, and we are back. Thanks for hanging in there after that commercial break. And I'm here with professional investor Ray Pantak, a friend of mine, a hustler, a guy that's been doing this in the trenches for about 30 years now. Is that right, Mark?
Yeah, over 30 years.
Over 30. And just so that folks know who they're speaking to and getting this information from, because you are going to give us a little bit of your guesstimation on where the market is headed, what's going on with real estate, maybe stock markets altogether, and what people should prepare for, what they should expect. So let's give them a little bit of a story here on Mark. And you alluded to it a little bit in the last segment, but let's tell them a little bit about your experience and all the real estate investing you've been involved with and why you gravitated to notes.
Right. Well, many people out there listening are interested in real estate. They've heard about real estate, but they've also seen some show on TV. It's a reality TV show that's not really based on reality because they do 30 days worth of work in 30 minutes. Ha, ha, ha. And of course, they got to have drama and all this kind of stuff. And most people are like, man, I don't want to have to deal with these contractors and these headaches. I don't want to deal with these tenants not paying and tearing up my house. I would do real estate, but I don't know where to start. I don't have the money. I don't have the credit. It's a headache. I mean, but the flip side is this. Geez, I just broke 50 years old or 60 or whatever the number is. And it's like the stock market's making me nervous. The government's making me nervous. There's all kind of things. Inflation is making me nervous. What the heck? I got to do something to fund my kids' education, my retirement. And here's the sad thing. Most people don't bother making a priority basic financial literacy, financial education. So I happened many years ago to come across a book called Rich Dad, Poor Dad by a guy named Robert Kiyosaki, the best-selling author worldwide. Many people have heard of. And then 20 years ago, I had the good opportunity to have a radio talk show myself in Dallas where I interviewed him and all his real estate advisors and spoke at some of his events. And then I got speaking on the cruise for the National Real Estate Investor Association and spoke at real estate investment clubs all around the country, coast to coast. And in my local market, which predominantly became Houston, Texas, people heard about my success and people said to me, well, man, I'd like to learn how to do this. And so through the local Real Estate Investor Association, there's a thing called wholesaling. And so I became the focus group leader for wholesaling. Why? Not because I wanted to do the wholesaling. I want to train other people how to go out there and find these deals who were scared, who didn't have the money, who didn't know what to do, but they could find it, bring it to me. I'd evaluate it, and I would be the buyer. So they would have virtually no risk by finding and bringing these things to me. Now, I've also trained people how to do that applied to notes. And people say, what? Well, when you're out there, you need to have a Patrick or Desi or someone like me that has experience that you can bring these notes to, especially when you're first getting started, or better yet, get some education, as Patrick will be talking about here shortly. And what I do mostly is I got people who say, I just don't have millions of dollars. I've only got 50, 100,000, whatever it might be. And it's in my retirement plan in the 401k from a prior employer. And I say, what if I could work with you for free? Free? Well, you might want to take Patrick's course because it's very affordable and have basics down. But literally what I do is I find a house in a small town that I can buy for not only 50 cents on the dollar, typically less because there's just not a lot of buyers like a big city. And when I do, and I buy it for all cash, I use a private lender's money. Now that's a different aspect where you can loan short term and make 6, 8, 10, 12%. And some people do that and it's like a 6-month basis. So I work with those people, but then I also work with the people that say, hey, I want to just set it and forget it. So I don't want to have to be every 6 months constantly doing this. Can't I get that kind of return, but have it where it's in my retirement plan for the next 10 years? Yes, that's buying a performing note. Oh, how do I do that? So I work with people on actual deals where I find the deal. Sometimes I teach them how to find the deal, but then find the deal, negotiate the deal, structure the deal, and get it sold. And then make sure we have the right attorney, all the professionals involved. So all the documentation is correct. And what ends up happening then is this note that we've created, there's a secondary market of people who want to buy that for their retirement. So there's a resale of these notes if you get educated and know what to do. So one of the niches that I focus on is creating these. And then people say, so you don't hold any real estate? Oh, no, I do. But I'm going to buy a property maybe in a bigger city like in Austin or San Antonio, where it's going to appreciate the places, because people say, well, what about these notes? Aren't they going to lose value with inflation and everything? In a small town, many times those houses 10, 20, 50 years ago, they were 50 to 100,000. They still are. They haven't gone up, they haven't gone down, and there's people living there. And it's like, oh, well, the population is 10,000. Yeah, but look, 20 years ago, the population was 10,000, and now there's a Walmart within driving distance. So the point being is, I only buy normally in county seats where there's a courthouse, there's a Walmart, there's a McDonald's, there's a major chain like a Holiday Inn Express or whatever, but there's certain fundamentals in terms of part of my homework and due diligence I do to make sure, okay, this would be a good investment, and here's why. So there's things to get educated about, and that's where Desi will be talking about that in a little bit. But I like apartments. I buy apartments for passive. I like houses. However, I'm only going to buy the houses that are going to be, I'm going to have a management company, I'm going to put on autopilot. So I actually have 3 areas. I have houses, I have notes, I have apartments. I like the notes the best because I can buy a non-performing note at a discount. Then I can turn that around and make it reperforming. And then I can make a profit on that. And I can take some of that profit and then reinvest in my next note or an apartment. So the problem with apartments, everybody's all gung-ho on apartments these days. Your money's tied up for 5 to 7 years. There's not liquidity. With houses and notes, there's a liquidity that you don't have with apartments. Now they're all good, but each have their own niche area that you got to get educated about. So how's that?
I feel like because you are so educated in those different areas that there seems to be the right timing for some of these, right? So sometimes it's the right timing for apartments. Sometimes it's the right timing for single family, sometimes the right timing for notes. And since you follow all the markets, what's your outlook right now on the markets, right? We've got the real estate market that is still just thriving and going crazy, even though most of us have expected it to have a big turn down prior to now. The stock market's starting to feel it. Crypto's down huge. Everything's kind of crazy. What's your outlook on the real estate market and the market having to do with mortgage note investing?
The big challenge these last couple of years has been the market's been so hot. It's been difficult to find notes. The inventory has dried up in the apartment space and the house space and the note space. So when there's a recession and things begin to soften, now I'm not expecting a crash like we had in 2008 because a lot of things regarding underwriting the loans, there's a lot of screwy things that happen. I highly recommend watch the movie The Big Short, because there's a lot of fraud that happened. The government had to come in and bail out. So I'm not expecting anything like that. However, these last so many years, we've been in an unusual market because interest rates have gone to record lows more than, and people are like freaking out going, oh my God, 6%. Well, traditionally 6 to 8% has been in the range. So it's not even fully there yet. And the trade-off is when you've got the government borrowing trillions and trillions of dollars, they're not going to be able to raise the interest rates only so high and only for so long before it's going to have to come down and adjust. So I'm really not concerned about the interest rates. I actually think it's a good thing. The trade-off has been the affordability, and a lot of people in these bigger cities just can't afford the houses. So with every problem, there's an opportunity. And so what I see is there's people who now, and again, gas prices, inflation, all these different things, but they could literally live an hour to an hour and a half in a beautiful area out in the country. There still could be a Walmart there and there'd be some facilities there, but they could come in the city if they need to. But now they can raise their kids in a rural environment. They could have horses. There's a whole healthier environment than the big city. They don't have the crime. And so a lot of people are going to be looking. There are people who want to retire. There's people who can afford with their family, with technology. So every problem is an opportunity. So I see a great opportunity, especially in a state like Texas, in buying places. Lots of people would love to own a house in 5 acres or a house with a little bit of land. So there's these niche opportunities, and especially as there's recession, people lose their jobs, there's going to be more foreclosures. So as even small, even like 1%, 2%, people say, well, that's nothing. Well, it goes from 1,000 to 2,000 in a major city. And so now I only need, or you only need, 1 house a month. And if you could pick up 1 house a month as a foreclosure, what I do is, if you get educated or work with me, I stop the foreclosure, reinstate it, and take over that debt. This is a different area related, but it's called subject to the existing loan. So we've got veterans here in San Antonio, and they bought a house a year ago at 2.5% interest rate fixed for 30 years at 0 down. Now I can take over that loan for $200,000. I don't have to go to the bank. And now I can sell that. And something is called a wraparound, which I'm wrapping around the existing debt. And I can make a spread from the 2.5 they're charging. I might charge 8.5, 6.5, but I'm making a spread on the bank's money. And now my yield, I could be making $200, $300, $400 a month, but I don't have a tenant. I don't have toilets. I'm not a landlord. I've created a note, buying a house and selling, wrapping around subject to an existing debt. And it's like, it's a new house. It's 5 or 10 years old. And there's huge numbers of people who've got 20,000 down for that house, but they can't get the house at the bank, but they can get it through me. So there's always going to be these niche opportunities. And on top of that, there's 70 million people like myself, baby boomers, who, if not someone my age, somebody older, like a parent, that are transitioning. And so you have all this huge number of people of the baby boomer generation and parents of the baby boomers that are needing to sell their homes. So probate, especially my niche, is pre-probate. And what I love to do is buy one of these houses and then do what? Depending on the situation, seller finance it and create a note. So what I focus on is I've got 3 strategies that I'm buying properties and then creating notes. And depending on the circumstance, I might hold it for a year. So I shift the taxes to long-term capital gains. But this is what I do, is I help people who want to have passive income. So passive income from houses, passive income from apartments, and most importantly, passive income from notes. Because if you've got money sitting there and you don't know what to do with it, you can talk to Patrick, you can talk to myself, and we help people to passively invest their money and also get the basic education and networking, because you got to understand some basic fundamentals, and that's what we're here. We're here to help educate people. Anything else you want to add to that, Patrick?
I just, the beauty of it, it keeps coming back to a guy like Mark with that much experience, folks, in this business. He always keeps coming back to, he has creative ways to turn these real estate deals into paper, where he does not have the liability of the property. He puts homeowners in there, not tenants. He's able to help people become homeowners that may otherwise not have been able to, because they can't qualify at a big bank like Wells Fargo. And it becomes an opportunity for folks just like you who are listening, where you can own one of these mortgage notes in your portfolio. Yes, put a licensed loan servicing company in place so that the homeowner doesn't send the monthly mortgage payment to you personally. That would be odd. But can you imagine just collecting a monthly payment very passively because somebody's living somewhere, making their mortgage payment on time? And that's what we're talking about. We're going to talk about this much, much more right when we come back from this next commercial break. This is the Real Men of Real Estate radio show on KCAA, and we'll see you just in a few moments with professional investor Mark Pantak. Don't go anywhere.